morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. All right, traders, Monday night we're filming this video for Tuesday's trading. That would be December 1st, 2009. And traders, the very last video I did for you right before this one, we posted right before Thanksgiving. And I warned you, as I do in so many videos, not to trade 3-day holiday weekends. We don't do it here. We stay away. You see those horns? 3-day holiday weekends, you usually get the horns when you try to trade them. Stay away from 3-day holiday weekends. Many of you wrote me horror stories that traded on Thursday on Thanksgiving, and then on Friday, when we didn't have a whole lot of time in there to trade and not a lot of traders, the S&P down 35 points, up 40 points in a day and a half. How could anyone catch that right unless you got lucky? Now, traders, I tell you all the time, usually it's a reversal. It's a move in the opposite direction of where the market was normally going. We have been going up in the S&P. It was a smash down move. And I have a chart I will certainly show you to illustrate visually why you should not trade 3-day holiday weekends. But that's the past, right? The present, we are looking at soybeans and wheat. Both have a green omni for tomorrow, baby. Green omni. The soybeans and wheat both have both flags. As you can see this illustration right here, there's a flag, and this would be considered the flagpole. You see these days going up, 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 and then you have some sideways to down consolidation. Well, that basically is a flag with a flagpole. There's your pole, there's your flag, and usually you break out towards the upside of a bull flag. Both soybeans and wheat have both flags, and I have charts to show you on that. Then we have the S&P, and to be honest, traders, the S&P is very indecisive right here. It just doesn't show us whether it wants to go up or down, so I'm thinking, being that it's indecisive, let it play around a little bit. We have a trade set up for tomorrow in the soybeans and wheat and the S&P, but we were going to start the S&P off from a neutral posture. Wait for the S&P to pull into an omni sweet spot, and if it works, then we'll get in. So we will keep an eye on the S&P. I'm not saying it's going up tomorrow or down. I am saying neutral, and then we'll ride whatever direction we get. But for the wheat and beans, I think we got some upside coming. And with no further ado, traders, let's go to the charts. Okay, traders, we are looking at the S&P December daily bar, and let's step back a couple of days here. Thanksgiving, Thursday, we warned do not trade, especially the day after Thanksgiving or the day before, because you get really, really erratic movement that is very, very difficult to time, trade, or analyze. And you see this red box right here, traders? This is why I warn against trading on a 3-day holiday weekend, a major 3-day holiday weekend. Do you see the size of this bar right here? Do you see any other bar in this chart that even comes close to the size of that bar? That's what you got the day after Thanksgiving. You are not supposed to trade on those days, traders. You cannot believe the horror stories that I received from traders that said, Oscar, why didn't I listen? I got killed on that. Because look at the drop. It goes from the 1120 area all the way down to the 1070 area and then back up. It might have went to the 1068 area and then back up, boom, and settled in the middle like nothing ever happened. How are you supposed to properly gauge that move, traders? There's no analysis that's going to tell you that's coming. So then you're trading seat of the pants. And if you traded seat of the pants on that day, I have a feeling it was a costly one for you. Remember this video. Remember that look. Remember the size of this rectangle or this huge bar the next time a 3-day holiday weekend comes up and I do one of these warning videos for you, okay? That's the past. The past is done. Let's go now to the present so we can see what we're doing tomorrow. Okay, traders, we are looking once again at the Emini S&P December daily bar. I've blown the chart up, or I should say I've made the chart clearer for you where you can see more days. And what I'm seeing is this. This market looks like it might need a couple of down days before the next assault on the upside. Now, you know, whether it goes down or up from here, we are right in the middle of this channel, right here, dead center. Where's it going to go from here? Indicators are clearly baffled or confused. Some indicators, technical indicators in the S&P are pointing up. Others are pointing down. That tells me we are neutral. We'll go sideways on this and let the market tell us where it's going to go. But in between these two lines right here gets a little more difficult to trade. So let's see. If it wants to make its assault towards the upside, we'll get long. If it wants to come down and make an assault towards the downside first, we'll get short. We will play the S&P by ear. But once again, as I said, indicators are mixed, leaving us neutral, and then we'll approach the market when the time comes. So that's the S&P. As you can see, it's a stand-aside market. What's a trader to do when he can't find a good S&P setup technically? He looks to another market, or the way I like to call them, look towards another money tree. With that in mind, we have soybeans and wheat to look at, traders. Let's go take a look. Okay, traders, you are looking at the soybeans daily bar chart. This is Jan 10 contract, January 2010. What these blue lines represent right here is a bull flag. Can you see that, traders? See the flag pole, like the one I pointed out on the board earlier? Well, here was the flag, and we broke out of that flag into a very smart parallel channel. The only time this parallel channel has been violated was Dubai Day. And you know what? We're not counting Dubai Day because all the markets went crazy on that day, and I'm just going to discount it. So with no Dubai Day, we have not broken the bottom of this channel. We just keep moving higher. The indicators are clearly bullish, and I think soybeans, now that it's broken out of its flag, may have more upside, may want to go challenge these previous highs all the way back here. So let's take a look and see. We certainly do have a setup at our site for the soybeans. If you'd like to trade the soybeans and you are bullish for tomorrow, you come on down to our site, www.livewithoscar.com. Jump into the free chat rooms and take a look at the trade. We are there to alert you throughout the day and night in those chat rooms in case you are trading with us. So there's your soybeans, traders. Remember the picture of the bull flag and what should happen after a bull flag, right? Now, I also mentioned wheat and the wheat market. I would like to trade the bull flag in the wheat market. Let's go look at that. Okay, traders, we are now looking at March wheat. That's March 2010 contract. It is the daily bar chart. And look, same old pretty blue flag you got there, right? You see the bull flag in blue, circled in red? Here's the flag itself waving in the wind. This blue line represents your flag pole. It's all the days that went up. Then the sideways to lower consolidation. And the beans broke out towards the upside of its bull flag. The indicators in wheat are bullish. Why not have wheat break out of the bull flag? Maybe it'll just go up and test this blue line up here, the top of the flag. But that's enough for a day trade, and we are day traders. So we are going to look to buy the wheat tomorrow. And once again, we do have a setup there. So come on down to the site, traders. Again, pull your charts, pull your dailies, pull your indicators. Look at how the indicators in the S&P are confused, but the indicators in wheat and soybeans are clearly pointing straight up. Do your own homework, traders. So, traders, you see those charts? You see the bull flag setups on the soybeans and the wheat? You see what happened with beans? Boom, blowout after the bull flag and still looking good. Now the wheat looks like the same thing could happen. You got the bull flag without the blowout yet. Remember what that bull flag looks like, traders. There's one right here. You got a few up days, and it looks like it could be a pole. Then you get the sideways to lower consolidation, which sometimes is a parallel channel. I like when the flag is parallel best. Then you get the breakout towards the upside. So take a look at that for yourselves. Now, traders, I mention all the time not to trade alone, to come on down to our site, www.livewithoscar.com, and jump into the chat rooms. One of the reasons why are that many of my trades never make press. They never hit the print. They never go out to the public in the Omni. I type in the chat room and speak on a microphone in the camera and say, all right, traders, get in right here, get out right there. So if you are not at our site, you will miss a lot of that action. I can't give out all the trades we're going to do in these public videos. And there are certain times the market moves so quickly, I only have enough time to type and speak, and everyone gets in, like what happened today in the S&P. Today in the S&P, we basically sold the highs, waited for it to come down right near the lows, and got out. But that trade, by the time it hit the press, was probably difficult to get in. So you need to be at our site. You need to be in the chat rooms in order to catch all of these trades. And the Omni has had a fantastic winning percentage, ever since we've been giving these trades to you for the past 3 years. So make sure you come on down and see what that's all about. Now, traders, one of the things I say to you in every video, and I will always say it, is this. A stop is your best friend. If you do not have a stop, you can easily lose your entire account plus more. You can end up owing the clearing firm money. Always put protective stops in. Always put them in before you place your get-in position orders. In other words, if you're looking to buy S&P, put your sell-stop in first, then get long. No decisions need to be made at that point. The stop is in. You know what the risk is? The emotions come out of your trade. Keep that in mind. Traders, stops always go in and they always get placed first. All right, traders, Monday was our first day back in a winner in the S&P, baby. Rock and roll. Tonight we're buying some soybeans. We're buying some wheat if the trade sets up. And we'll play the S&P if there's a smart look at it tomorrow. All right, traders, that's about it. I want to get back out there to my chat rooms and I want to study. Give me a call anytime, day or night, 702-629-4755. And as always, keep your emotions out of trading. One of the best things you can do is to say this to yourselves every morning, every afternoon, every evening. And you know what that is? Subs are in. Emotions are out. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I'm a 27-year seasoned trader on and off the trading floors. This is how I've made my living for many, many years.